And what it means is that that impact or the relationship between supply and demand is alive and well in the financial markets.
Welcome to the big show. This is Investing with Confidence. I am your host, Joshua David, and we are happy to have you with us today. As always, as you know, I do always have my good friend. He is a great pal, and he is looking good today, Mr. Al Connickson. How the heck are you doing today, Al?
I am feeling pretty good, Josh. How about yourself?
I am doing fantastic. It is always great to be back, helping our listeners make better investing decisions. And Al, we have another jam-packed show. As always, we had another great week in these financial markets. There wasn't a lot of movement with the indices, I should say, correct words there. Mm-hmm. But there was great opportunities because we've seen some big up days, we've seen some big down days. Oil was down once again, a couple weeks in a row now. Gold was down, but the U.S. dollar had a pretty good return this week. It was up about 1%. Now, that's a lot of things that we're going to talk about here today on Investing with Confidence. Sponsored by Online Trading Academy, is these multiple assets, how they all correlate. We mentioned that last week, but the market's been a little bit fishy these last few weeks. It's been almost consolidating, maybe a verge for a great opportunity, but which way is it going to go? What is happening? How can we participate? Why are these markets so phenomenal right now?
Well, you know why they're phenomenal? Because they're open. And every day that they're open, they're presenting opportunities for us. But it has been kind of an interesting period here. We've seen a rotation kind of back and forth between, and probably a little bit more out of technology stocks, but into the more, value type stocks. There's been kind of a tug of war or a push and pull between the feeling that the economic conditions are improving with the pandemic kind of receding against the feeling that inflation may come back, and also that the pandemic impact is still not over. In fact, we're seeing some countries where it's actually on the rise. So there's this kind of tug of war back and forth, and we're going to be seeing that for a while, which means we'll be seeing these big moves up and down in the markets, and that's a good thing. And how great would it be if it didn't matter to you which direction the market goes? If it goes up or if it goes down, you can participate in a way that's beneficial either way. In this last week, at least the Dow and the S&P 500, eked out a small weekly gain,
a smidgen.
But there were some movements, daily movements within that week. But what we do, Josh, to help people to maneuver these markets is, and this really is the most important thing. We teach them proper entry and exit positions. And what I mean by a proper entry position, that's a low risk entry that has the odds in favor of the particular trade or investment moving in the direction that you want it to go. And then the proper exit, that's identifying a realistic profit potential and then learning how to protect that. A lot of people come in thinking that there's a secret, there's kind of a magic formula, and they want to know what that is. There really is no secret. But what I will say, it's not mastering fundamentals and it's not mastering technical indicators. The only reason price goes up is because there's more buyers than sellers. And the only reason price goes down is because there are more sellers than buyers. It's really kind of that easy. And what it means is that impact or the relationship between supply and demand is alive and well in the financial markets. And that is something that really can't be argued. When there's more demand for something, and we're talking about buyers, price is going to go up. And where there's more supply or sellers, price will go down. But it has to be that demand and that supply has to be in large enough quantities or amounts to actually move the price of something. That's not me and that's not you making a trade or an investment, but it is the big institutions, what we call the smart money, the big firms, Wall Street firms. And they're doing this on a repeatable basis, on a reliable basis. So it's something that we can utilize to our advantage, but we need to know, to really benefit from what they're doing, we need to really know what they're going to do before they do it, so we can be positioned and then really let them help to provide a profit for us.
You're right. It's that law of supply and demand. It's kind of like the law of gravity. I mean, you remember those little trolls that people had, those with the pink and blue hair and all that stuff? Say for instance.
Yeah, I guess I do.
I'm just trying to paint a picture here now. Those little trolls. Think about if you threw up a a little troll into the air, what would it do? Come down. That's the law of gravity. And that's very similar to supply and demand. If there's more buyers than sellers, which is demand, price will go up. If there's more sellers than buyers, which is supply, price will go down. You can't argue that, as Al is talking about. So you do need to find the proper entry and exit points, which is there's different techniques to do that, because price is number one. Price is what drives the market, but also price is where you make your decisions, not based on time, time of day, or what is going on with the market. It's the actual price. If you want to learn more about supply and demand, how these financial markets really work, the different entry and exit techniques into these markets, I'll come up next. I want to shift gears a little bit and talk a little bit about financial education. There's different types. There's different types of skills. There's knowledge, but combining them, now that's another story. So let's talk about financial education. Come up next. This is Josh and Al, Investing with Confidence. We will be right back.